the first part of your career is focused on growing your income.
Right.
You know, what can I do? How can I grow my business? How can I, if you work for a company, how do I move up in the ranks? And I want to go from entry level to VP in a 10, 15-year career path, and I want to make more money. But at a certain point, you shift gears once you start to make a pretty decent amount of money, and you say, now, how do I pay less taxes?
Exactly.
And that's the new game, and that's the game that these multimillionaires are playing, is how do I shield my money from paying the IRS and pay them the least amount possible, legally, of course.
Absolutely.
You know, and use all the tools that are in the toolkit to do that, and real estate is one of the best ways to do that.
Real estate is one of the best ways to minimize and defer your tax liability. You know, Bitcoin, crypto, doesn't have that. Stocks, bonds, mutual funds, doesn't have that, right? What else is there? What other investment vehicles do we have? That's it, right? When you talk to someone, oh yeah, my money is with my financial advisor, it's on Wall Street, it's this, that, and the other. Okay, how are you going to take depreciation off of the money that you just made on Coca-Cola? Well, you can't. You got to take that profit and put it into real estate, or buy an asset, buy a car, buy a plane, buy a boat, something that you can depreciate, right? And real estate is just, when you're buying cash flowing real estate, you get what I call the golden trifecta. You get cash flow, appreciation, and depreciation. Where else can you get that?
It's very hard. It's very hard. Yeah.
Yeah. I agree. That's why we're in it.
That's why we're in it, baby.
That's why we keep the needles going in the veins.
That's why we're in it, man. That's why we're in it,
And it's
beautiful. It's a beautiful thing, and it helps you build wealth. It helps you keep more money in your pocket. And again, the tax code, the 10,000 pages of the IRS tax code. Now, I'm not a CPA, not a tax attorney. That's a disclaimer. But, those thousands and thousands of pages are written for you to take advantage of the tax code and minimize your tax liability. Right? It's written for the people who take risks.
Yeah.
Right? The guy who starts a hospital, the guy who starts a business, who opens up a coffee shop. It's there to incentivize us to go out there and build and open up businesses. Right? The person who comes in, and don't get me wrong, everybody has their role. Everybody has their place. We have, if everybody on the planet were multimillionaires, I'd be like, Jared, I'll give you $10,000 to go get me a cup of coffee.
Exactly.
Yeah.
Right? We wouldn't have that, right? And there are people that, I know a lot of my friends are like, dude, you know what? I don't want that headache. I want to wake up in the morning. I know where I'm going. I know what my job is. I love what I do. I love the people I work with. I come home. It's quiet.
Yeah.
It's quiet, right? We're at home, entrepreneurs. There's no closing the shop. Even if you're a coffee shop owner, or a store owner, or a business owner, you can't turn it off.
My wife told me again this morning, I woke up, and when I wake up sometime between 2 and 4 a.m., I have to walk out to the couch because I'm just up and I'm thinking. And the first business thought that goes through my head wakes me up. So I go on the couch, I send myself notes of things to do, and then maybe I do have a little idle time and go on Twitter. And then maybe I'll fall asleep again between 5 and 6 a.m. And then I'm up, and it's bad, the lack of sleep. So there's great things about entrepreneurship. I've got a flexible schedule. I don't need to clock in at 8:30, but there are those downsides, and the weight of the business, and feels like the weight of the world is on your shoulders. So I know you know that.
Oh yeah, I battle with that. But you know what solves that too, or helps solve that, is a good team. To your point earlier. I mean, when you know like X person has got things under control.
Got your back.
Yeah, it's just like, okay, at least that's one less thing that I have to stress about.
Right.
For me, what keeps me up is like the level of uncertainty around something we need to execute on, where it's like we either haven't done it before, or the people I have in place to get it done, it's just like a big question mark if they're doing it correctly, or if I'm going to have to find time to go help them solve what they're supposed to solve, whatever that is, right?
Sure.
So, yeah.
And it's along those lines. What happens a lot of times, it triggers something. I'll wake up and then I'll instantly have a thought of something I hadn't thought about that new project we're working on, and it's a detail. And until I go and get it, notes sent to me, on my phone,
I can't go to sleep
without that. And then I'm up and whatever. Yeah. But enough about my sleep. But so,
tell us more. Tell us more about that.
Take a nap here, guys. Wake me up.
How do you really feel about that?
So let's talk about two different things. I think people who are watching this, one set of people could be people who maybe they want to, I don't know, dabble in syndication or get their feet wet or put their toe in the water about that. How would that look to them? And then the second question is those people who maybe have some capital sitting on the sideline, they're working hard at their business, they're doing their investments in their 401k or the things they know about. Maybe they're dabbling in real estate with a few little investment properties here and there. How would they invest in a fund such as yours, and what does that look like? So kind of those two, the sort of the GP route, getting their feet wet in syndication, and the LP route of what does that look like?
Sure. So, when you're starting with a GP, and we just talked about it's about the team. Mm-hmm. When you're starting out, and a lot of my coaching clients, they have the same thing happen to them. You're sitting behind a desk, you're sitting in front of a computer, and you're traveling around the country. You're looking at properties in this market, you're looking at properties in this market, you're shooting an email to this broker, to that one, you're underwriting, blah, blah, you're on social media, you're watching what everybody's doing. You think you're out there and people know who you are. People, oh yeah, I know Nizan. Oh my God, yeah, Nizan is sitting in Boca at his house, in his room, and the world is watching me, right? Nobody's watching me. Nobody cares about me. Nobody cares about what I'm doing or who I am. So it's going out there and building that team, right? You have to have a team in place, because when you're going out there, when you're building the relationships with the brokers, right? I tell my coaching clients this all the time. When you're starting out and you're underwriting and you're analyzing markets and you're analyzing deals and you're submitting letters of intent, what happens if your letter of intent gets accepted?
Yeah.
Then what?
Things happen fast, right?
Right.
Yeah.
I go, then what?
Yeah.
So when you want to, you said when people want to dabble in syndication, don't dabble in it. There is no dabbling. You can't really dabble in syndication.
I think that's the answer. But
right?
people will ask that question,
right.
but that's
there
the
is
answer.
no dabbling in syndication
dabbling.
Because if you dabble with it, you're trying it. And when you try something, you pretty much not succeed because you're trying it. And you go, oh, it didn't work, whatever.
Right.
And if you're dabbling in it, it means that you're not 100% in it. You're not 100% committed to it. And you're leaving the back door open. If something happens, you're like, you know what? I'm out. So if this is something that you want to do, then find a mentor. Find someone who's done it before, right? Because you're going to need a person who's done it before on your team for a couple of reasons. One, you want a sounding board. You want someone to tell you, hey, don't go over there. I went there and I scraped my knees bad, so don't go there, right? Then you need somebody on your team who's going to be your sponsor, right? Not your AA sponsor, but your key principal is what they're called, right? Someone who has the track record, liquidity, and net worth to be able to sign on the $5, $10, $15 million loan that you're getting, right? If you're a newbie and you're sitting behind a desk and you've never done a deal before and you're talking to a mortgage broker and you're saying, hey, I found this deal, I need $5 million from you and I'm going to raise $3 million from equity, the mortgage broker is going to say, okay, great. What's your portfolio look like? What was the last deal you've done? What's your net worth? What's your income? Are you able to pay 9 months worth of debt service, of mortgage payments, if there's no cash flow? You know, right? That's when you start to stutter. So you need to find that person. So when you're getting started in multifamily, you need to get educated. You need to learn the language, the lingo, right? Because the broker is going to call you, and when you're talking to them, they're going to go, so Larry, what's your going in cap rate? I'm sorry, what's the what? What's your going in cap rate? What's your yield over cost? I want a 7 cap rate. And I go, well, you're asking me or you're telling me, right? So you need to know the language. You need to know what you're looking for. So you got to get educated. You got to build a team, right? You got to have that sponsor. Have a mentor, man. Have someone or a coach, someone that'll teach you how to underwrite, how to look at a market, right? I was talking to we have a group coaching every Wednesday night. I had my group coaching call last week. One of my students on the call, one of my clients, she goes, so underwriting is just taking numbers and throwing them into a spreadsheet, right? I said, that's exactly what it's not. And I said, wait a minute. If you're asking that question now, I'm not doing a good job as your coach, because that is absolutely not
Yeah.
what underwriting is. Underwriting is understanding this side of the street versus that side of the street. Understanding where the sun rises and sets and how that affects your property and affects your sunlight and whatnot. Understanding what the flux of movement is in that market. Is winter in that market the death of you? Or is it the best of it, right? We're in Wichita, Kansas right now. We bought a property. I'll give you an example. And we just moved into that market. That's a fresh market that we're in. We didn't realize how badly the winters were over there. Now, I don't mean with the snow and whatnot. I mean by the movement of people. A lot of people move out. A lot of people don't lease up in the winter. There's not a lot of movement. We had a lot of leases come due in the winter. And we realized, oh my God, we dropped down to 88% occupancy. Well, we got to pick it up, move, do this, do that, blah, blah, blah. We picked it up again. Went through another winter, saw the same trend. Now we said, okay, how do we fix this?
Yeah.
We can't have leases coming due in winter. So now we're going to have 6-month leases so that we're going to lease up at a certain time so that they're in during the winter, and in the summer, their leases will come due because there's a lot of movement.
We do the same thing in South Florida, right? Like there's like an optimal time to lease, and we try to rearrange things so that they all kind of hit in a certain timeline.
Because
it's a real asset in the real world. You need to understand how when you underwrite, that's what you're thinking about. Right,
exactly.
Like you said,
exactly.
And
That's
people don't
underwriting.
appreciate that. Yeah,
that's underwriting.
Yeah.
That's knowing. That's building for that movement, for that change. Right. It's not just taking numbers and throwing it into a spreadsheet. It's understanding what the millage rate is and how to do it. I had a call with one of my clients last night, and we were going over the millage rate in Bentonville, and we pulled it up, and it said 51.6%. So he underwrote it, and he goes, "Look, man," he goes, the
taxes are so high.
Taxes are $120,000 a year. He goes, "It doesn't make sense." I'm like, that doesn't. I'm like,
Divide by
that millage rate is not. It just doesn't sound right.
Yeah,
51% of the assessed value. I said, let's look. So we did some research together, and I said, all right, dude, it's not 51%. It's 0.51. That decimal point. So now it went from $100-something thousand to $40,000 or $50,000, and now it made a little bit of sense. So that's also part of underwriting, understanding, not just taking an insurance number and throwing it in there, but having an insurance broker on your team that you can call up and go, "Hey, Jaron, listen, I got this deal. I'm sending. Give me a quick quote, roughly." 20,000, 50,000, 100,000, where are we going to be? Okay, great, I got that. Knowing what your real estate tax is going to be. Calling the city and talking to them. How do you assess a 1-year-old property when you're taking over? Do you assess values every 3 years? Do you assess values every purchase? When you exchange deeds? How do you assess that? How do you understand what's the job growth coming in? How many people, right? So that's underwriting. You really have to understand
making sure that your insurance quote matches up to what the requirements are of the lender.
Exactly.
You have to be communicating with those two parties because maybe they'll give you a quick quote, but you're not buying it cash. You're buying it with financing, and do you need wind or not, or what are the
Is it
policy
a $3 million policy and the lender wants $5 million?
Changes your numbers pretty quick.
Absolutely.
So I would just add one or two other things to that, just from my experience with syndication, that one of the best things to do, well, two things. One is, you mentioned it already, get education. Go to one of these courses.
Yep.
There's a number of them out there. I've been to the Rod Khleif one. It was very good. There's at least a handful of nationally renowned teachers and mentors that are out there that give these courses. Start with that. Start with a weekend course, I think is great. The other thing too is start as an LP investor.
Sure.
Put one
Absolutely.
LP investment in, put 50,000 in, or maybe you can go as low as 25,000. Maybe someone will let you in to a deal for something small and get exposure to that.
Right.
And then that also helps you to build your resume as well, because maybe you're a small participant in a 400 unit apartment complex. Well, you can put that apartment complex on your resume.
Sure.
That you're an investor. You're not a GP, but you're an LP investor in that. And all those things on your resume add up when you're talking to brokers in the future. So
Absolutely.
I would just wanted to add to that. And then what about for LP investors that are looking to get in and get some passive income? What does that look like?
So again, you got to look at the team.
And you still need to understand what the heck you're doing if you're an LP investor, right? I mean,
Absolutely.
and that goes back to like an LP can make you a GP, right?
Right.
But like the guys that I know that are LP investors, they spend a lot of time looking at a lot of different deals and trying to understand them.
Right.
Right. I mean, like
And
you
the
can't,
differences between them. Yeah,
right. Exactly. And then who to go with, who to work with. There's a ton of syndicators out there, right?
Ton of syndicators, ton of people. There are there are LPs who became syndicators who are now saying, "Oh, I'm in 1,000 units." Well, yeah, but you're an LP and you have no knowledge of the inner workings of the day-to-day management of the property.
Very different experience. Yep.
Very different, right?
Sure.
So again, as an LP, you want to look at the team. You want to look at the executive team that is running the ship. How many deals have they gone full cycle? What was their, how do they communicate with the investors? Who are they? Do they have enough liquidity? Do they have enough this? Have they, right? So you want to do your due diligence on them as well. But yes, as an LP, go into something that you understand, that you like, something that will, if you're starting off, again, it also depends on your appetite, right? If you're a risk taker, you're like, yeah, dude, okay, go into a high risk situation. I'm not a high risk person, right? I don't like that. I don't like when things keep me up at night. So I want to go into a conservative deal. So I would look at, okay, what is the underwriting, right? How are they conservative? If they're telling me that there's a $400 upside, are they telling me that they're going to do it the first 6 months? Right? Because you have operators that are extremely aggressive. Oh yeah, we'll take the rents and we'll bump them up. And the first 12 months, we're going to take it and we're going to, turn over the entire property and we're going to occupy it and we're going to do this and we're going to raise rents and blah, blah. You know what? That's aggressive. That's aggressive because things happen, right? When you're sitting in front of your computer and you're creating your business model and you're looking at the rent roll, you're going, okay, so there's 100 units. You know what? I predict that when we raise rents, a lot of the people aren't going to renew. Well, okay, and when you renew, you may not, and there's a huge increase. Let's say there's a $400 increase. You got to go in and you got to throw a lot of money in that renovation.
Turn costs, yeah.
Turn costs to make it go. A lot of times, the tenant will go, listen, I just want to renew my lease. And you're going, okay, I didn't expect you to renew. I expected you to leave. That not changes your business model, right? So you really want to understand and make sure that you're getting into a deal where the ownership team understands conservativeness. They understand that, where are the buffers, right? How much buffer zone did they put into the deal right? The last 2-3 years, right? You're looking at underwriting where people are going, okay, we're increasing rents by 7 to 10%, and we're only increasing expenses 3%. And now, and still today, you see that increase of that difference, and you're going, that's super aggressive, man. That's very aggressive. How are you going to do that, right? Well, we're gonna refi in month 12, and we're gonna do this, and it's, you know what? The real world is a lot different than paper. And if it's a little too aggressive on paper, I would be careful with it.